Bring in Kathleen Smith on that note, president at IPO ETF manager Renaissance Capital. Kathleen, good to see you. Thanks so much for joining us.
Thank you.
IPOs have lagged the broader market, particularly over the last 2 months. First off, your take on these two deals today, Match Group and Square, that priced below expectations.
Yes, we're in a discounting mode ahead of Thanksgiving, bargains in the IPO market.
Black Friday for companies.
Yes. And these IPOs are all about swiping. So we swipe right if we like the price.
Right. Oh, yeah.
And we swipe to buy.
Interesting. No, but the whole idea of swiping, the whole idea of the Square business, financial services and technology, that is a hot area. And a lot of people say we're going to see disruption in the in this area of the industry. And yet the stock did not resonate.
Well, we have a more disciplined public market, interestingly enough, than the private side of the market. So the public market is really a surprise, the one calling the shots here. And the Square is interesting because 2/3 of small business do not take credit cards. So they're focusing on small business, have had a good run since they started 6 years ago.
Right.
And however, the focus on small business for them has meant lots of losses. So they're not earning money, but have $1 billion in revenue. And we're not certain, and investors are looking at what they're doing there because it's hard sometimes to make money with small businesses. Risk is higher, and the customer acquisition cost is higher. So those are the things. And then on top of that, Jack Dorsey is only spending half the time with Square.
He's the CEO of two companies.
That's so bubbly.
Twitter and Square.
But your point, I mean, the market really, they almost look like binary options now. By the time everyone gets paid and they go public, they're binary. They're either that squirrel with the head cam on it, which is GoPro, which is a stock that does not look like Jonathan Bush's, Athena.
But which again, I've disliked for so long, and people dismiss it and said, no, it's the athletic enthusiast that's going to buy this company.
No, they thought, and then they thought the police were going to start wearing cameras.
But isn't that the point that, like, you have a very, I mean, as you know, they're very sophisticated analysts and portfolio managers looking at these companies. They're saying, okay, it's a boomer, it's a bust. I got to make a decision.
Well, there really is some analysis happening here, and we know that the last round, Square is the example, it's the playbook for what's going to happen with this huge number of privately billion-dollar-plus companies that are sitting in the private market.
We interviewed one in Palm Springs, Revel, and I thought it was a fantastic idea, Revel, which we'll bring to you next week. The bottom line is small business is getting crushed because they are facing, on the one hand, employees that want $15 minimum wage, and on the other hand, they are facing they're facing Obamacare. They're going to get fined if they don't offer their employees health insurance, and it's expensive.
Yeah, I think there's challenges for small business, and to even see a company that's addressing the small business is a good thing. And Square is just an example of what's going to come down the pike for the other private valuations. Private valuations are the area where the bubble is. The public market saying, hey, you may have thought Square was worth $6 billion. In the private market, this IPO is being done at $3 billion.
Right, but should they have waited? But should they have waited? Should they have waited? Because you've had a lot of IPOs that were tabled.
But they waited into the high billions for an IPO. My question is the IPO as a product disappearing? I mean, these companies are riding their value up into the billions before they go public.
They want to stay private longer, don't they, Kathleen?
Yeah. Well, is the public market losing the mojo?
Well, the issue is if you want to stay private, how do you end up monetizing? I mean, if the company were itself fine, we have private investors that own these stocks, and they can't just sit there forever. Their returns deteriorate the longer they hold them in the portfolio. Yeah. And we see the money drying up, and the private, it is going to dry up. The returns are getting lower the longer they wait and sit in there. That is why Square came out now. It's not a good time for Square to go public.
Well, there's a liquidity event.
If they have to do it.
They have to.
If the money is drying up, that speaks to the job market. That maybe you want to talk about connecting dots.
Can we jump, Kevin Kelly? We haven't forgotten about you from Recon. I know you want to ask Kathleen Smith a question. Go ahead, go for it.
Yeah. So, are we seeing going into next year the IPO market slowing down, given what's happening with Square, given what's happening with Match? I mean, we saw Alibaba wasn't a great IPO; it had much fanfare. So, how is it going to shake out next year for 2016?
Well, the most important thing about the IPO market is not how many IPOs we have. The most important thing is, are we making money? So if we're making money in the market, a slow IPO market is no problem.
I like you, man.
Yes, in the fourth quarter, the IPOs that got priced on average 18% below their proposed range.
And that was a good thing.
And the result is they're up 8% on average in the fourth quarter.
So the steam fitters in the 401k got a lift.
Yeah.
So
whereas all the other companies, the lift is going to the few private equity owners that ride it all the way up.
Right.
In the billions, and you lose that lift for the average Joe.
Stuck it to the private owners.
Well, we fully expect that with these positive returns, we're going to see a good IPO market coming forward. We have to see the discounts.
What Dagen just said, sticking it to them, there's one thing like buying a squirrel cam company or a unicorn, but some of these are like big private equity things that have a lot of leverage. Those are the interesting ones to watch.
And they're being, look at First Data. They were highly leveraged. The stock was discounted below the range to get it to trade up 10% from its IPO price.
Kathleen, great to have you.
Thank you.
Love having you, Kathleen.
Thank you.
Thank you so much. Coming up.